All right, guys, welcome back once again. We're here to give you guys a little bit more information. This time we got a guest here. JT Pells is going to be talking a little bit about nonprofits. Me here today, Joshua Thompson at Thompson Tax Group, your guys' go-to for any tax, accounting, payroll items that you guys need help out with. We do a lot of tax planning as well this time of the year, as well as earlier in the year, as well as tax preparation. And as always, the man, the myth, the legend here is with us again today. Chris, you want to kind of introduce yourself?
Yeah, thanks, Josh. Chris Jackson, Cambridge Financial Group, doing financial planning and insurance, helping businesses and individuals deal with their risk management and be better prepared for retirement and after. So we're also happy to have JT. JT, you want to take a minute to share a little bit about yourself?
Yeah, absolutely. Name is JT Pells. I am a CPA by trade, and I specialize in nonprofits, nonprofit accounting services, tax services, kind of all sizes. We use kind of similar to what Josh had said. We help with payroll, bookkeeping, CFO services, financial services. But the thing that's unique about me is that about 90% of my clients are nonprofits. So I speak their language. I know what they're going through. So it just makes it for an easy transition.
Yeah, I don't even touch nonprofits. My nonprofit right now, JT, they go straight to him. For me, it's a whole nother area where you need to get expert in, and I'm not even going to step foot in nonprofits at the moment. So any nonprofit questions, I'm happy to take them and automatically forward them straight to JT. But today we got for you guys really just an introduction into nonprofits. What are they? Talk a little bit more about them if you guys have them. It's a great place to start for you guys. So we're kind of going to jump right into it, get straight to the point with you guys is, JT, I don't know if you mind sharing, but what is a nonprofit? How do we go about creating one if we wanted to create one?
Yeah, so a nonprofit, it's a legal entity generally organized for the greater welfare or for the good of society. As it says, it's that it uses the profits that it makes, reinvest them back into the community for your cause, things like that. I kind of think that's a dirty word, that you obviously do want your nonprofit to make a profit. Otherwise you can't, have an office, rent buildings, hire staff. That's on another tangent. And then in terms of creating one, it is a little bit of a process. I tell people, if this is something you really want to do, you got to treat it like a business. So the easiest way to create it, you have to apply for EIN number, similar to any other business. It takes a few minutes or so to go on the IRS website. Then you do the same process with at the state level. Each state's a little bit different. And then once you do that, you have to form a corporation. And then apply to be a corporation, elect 501c3 status, which is a public charity. You pay $600 to the IRS, and then you have to fill out a form called 1023, and it asks you a bunch of questions. A lot of people actually end up hiring people out to do it for them just because it's so cumbersome. It takes time, all that stuff. And there's more to it than that, but that's kind of the nitty gritty. You have to file with the state, then you file with the IRS, similar to any other for-profit business that you do.
Gotcha.
So as a follow-up question to that, do nonprofits have to pay tax? I know a lot of deductions go for nonprofits, but do they still pay taxes in general, or what's the?
I would say 99% of them don't. There is a tax called what's called unrelated business income tax. And that has to do with when you make income that's not related to your mission. So obviously most nonprofits, they solicit donations, they get grants, or they have what are called program services. So for instance, the Boy Scouts and Girl Scouts of America, they sell cookies. That's part of their mission because they're teaching kids how to be entrepreneurial, how to be responsible. So that would be a mission-based income. Where you'd pay taxes if, let's say, the Boy Scout or your nonprofit had a winter gala. For whatever reason, it gets canceled. We rented out this country club room and it's like, shoot, we paid $5,000. We're like, oh, the high school basketball team needs a meeting room. So you sell it to them for $10,000. You have a profit of $5,000. You would pay tax on that. Again, that's far and few between, but that's generally where you pay taxes. And then of course you have normal payroll taxes, which any other business has. But for the most part, most nonprofits aren't paying income tax.
Okay. Gotcha. I mean, that's a great clarification, definitely, because I'm sure a lot of people, when they're thinking nonprofits, are like, "Oh, I'm never gonna have to pay taxes, never have to worry about it." But there's always
Yep.
those small codes in there. It's like, nope, nope, red light. Make sure you pay these taxes right now.
Yep. No, exactly. It's it's at, I forgot to say, it's at the 20% rate, or it's at the corporate tax rate, or
Yeah.
as of, actually Josh would know, is it 20%?
Yeah, for C
20%?
corporations, 21% so
Yep.
far, and then if
Yeah.
everything passes, probably definitely start seeing that go up.
Yeah. Okay. So so you pay the corporate tax rate at the IRS level or the federal level, and then whatever your state level is. That's 50 or 43, I guess. I think there's 7 that don't pay income tax, but
Yeah.
yeah. So that would be, again, far and few between. Most people don't have it, but that's why you want to hire an accountant that specializes in it, because if your most general accountants probably wouldn't know that or wouldn't even think about it. They were just like, oh yeah, this tax return, whatever.
Yeah, exactly. It's really keen to have a specialist when you're working with these things. So we'll kind of hop into the next one, JT. What causes a nonprofit status to be revoked? I know people go through all these hoops to get the nonprofit
Yep.
status. How can that actually be taken away, where the IRS says you're no longer a nonprofit, or your state says that?
So the first way, and the most common way, or at least most common that's happened in my career, is when people don't file tax returns. So a lot of people think, oh, I started this nonprofit this year. I only made like $100. I don't need to file a return. If you don't file it for 3 years in a row, it's what's called automatic revocation. And you may or may not know it, because especially right now, the IRS is backed up.
Yeah.
So they're not very timely. So it'll get automatically revoked. You just won't get the notice for like a year or two, and you're operating. And so that's the one easy way, is don't file your taxes for 3 years. A lot of people think, I only did $100. Like, I don't need to do it. Nope, it all counts. Another way would be if you got audited and if you had too much business income. Again, some say the rule is like 30%, but essentially if the IRS comes in and says you have too much unrelated business income, like let's say you were just renting out a bunch of music halls, which is not your mission, they could say that's too much, we're going to revoke it. Getting audited, and I think we're going to come into this like commingling funds, so basically treating it like your personal bank account, because I'm sure Josh can attest to on the for-profit side. If you are a business and you are using your personal income, that is one surefire way to get a lot of deductions disallowed, I would assume, on that side. So it's the same on the nonprofit side. There's actually a lot of similarities between a for-profit business and a nonprofit. It's just kind of more the titles that you go through, and the deductibility of people, because people can deduct the money that they pay you.
So if you lose the nonprofit status, would you actually have to go back and repay all those, probably all the extra fee penalties, all that? So it could be a very big tax hit.
Oh yeah. Yeah. So you have to pay the 600 again. Actually, it might be more if you have to go back and none of my clients have had too many revocations, so I'm lucky. But so you definitely have to pay the $600 again. You have to fill out that 1023, which is the beast in and of itself. I've seen many people mess them up. So you don't want to lose it again. So it's just, and most likely you're probably going to hire a person to do it for you. That's another at least 4 figures. So it just makes sense to just file your returns on time. Like I said, the tax returns are pretty much the number one way to lose it. That's what I've seen the most.
Yeah. So sounds like go the cheapest route, hire the professional, just do every year.
Exactly. Exactly.
I don't have to worry about losing that status, because it could be a pain. I think, and if I remember correctly from us talking in the past, you mentioned that if they lose the status, you're now considered a C corporation and you're taxed at that rate, right?
Yeah. So what a lot of people do, actually had a person reach out to me. So you have to elect, when you first apply, you become a corporation, and then you elect nonprofit status, 501c3, C4. There's a bunch of, I think there's like 27 codes, but so you have to elect that. What a lot of people who try to, as I would say, air quotes, save money doing it themselves, end up electing a C corp, and they make a profit. And as we were talking about, if you're not a nonprofit, it can't be deductible. So you have to pay that 21% tax rate. You can go backwards and like basically amend the returns, not right, but you can end up getting the money back. But as Josh will tell you, amended returns are not great. Like that's not something you shoot for, because then it just takes time. You'll get the money back, but it's just, so don't even mess around. I always say, go to somebody to help you. do it correctly. Just like somebody, if you want to do an S corp, it makes sense. Just, hey, pay the extra money,
Yep.
have somebody do it right, because it is so easy to file for a partnership and you think you have an S corp, and I'm sure Josh has seen it countless times where it's like, I got a C corp. You don't have anything.
Yeah, I've seen it so many times. If someone comes in, it's like, you know what? I have a C corporation. They find out, no, you have a sole proprietorship, or even vice versa.
Yep.
I've seen that way too many times, and it comes to find out that the previous account they were working with been filing their tax returns wrong for so long because they didn't ask for the right documents, like the uncles and corporations and everything. And so now we have to talk with the IRS or the state to fix the past years of tax returns because they're filed as, for example, a partnership when they never elected to be a partnership and they're actually a C corporation. And now it's like annual fees, taxes, the work to do it. And it's really just important from this beginning to just work with that professional. It's going to make it so much smoother on the journey and make it less bumpy of a ride. But I could go on and on talking about situations. So I'll kind of hop into the next one. But really, JT, as a nonprofit, should I have a separate bank account? Does it really matter at the end of the day? I know what it is from the for-profit side of things. How is it for the nonprofit side of things?
Yes, absolutely. You should obviously you should entirely set up a separate account. It's very easy. My business, for my S corp, I use an online bank. A lot of my nonprofits, they use online bank. There's Capital One, Blue Vine. I mean, there's so many. It's completely free. So yes, open up a separate bank account. It's easier to track it from an accounting standpoint. One, your board's going to appreciate it because as we went backwards, maybe going backwards a question, most nonprofits do have a board, kind of like a group of advisors, board of directors. They are not going to want to see the founder like, oh yeah, I'm just using my personal account here.
Yeah.
I got little Starbucks here, some groceries there. Your board's not going to appreciate it. The public's not going to appreciate it because actually what a lot of people don't know is that tax returns for 990s are public knowledge. So it's very easy to look. Most people don't know. You just go on the IRS site and you can look up the latest 990 that you file. So it's, like I said, it's public knowledge. You just kind of don't want your business out there. And another thing too, you can actually, going back to it, you could actually lose your nonprofit status if you were to get examined by the IRS and they see that instead of nonprofit XYZ bank account, it says John Smith personal one. They're going to immediately start disallowing, well, it wouldn't be deductions, but disallowing expenses. And just I think the term in the tax world is let a sleeping dog lie. Now you just awaken it and it just causes a world of hurt. So the easiest thing is, yes, separate bank account. You're now running a business. So you want to treat it exactly like a business.
Yeah. I definitely agree with that one. Always keep it separate from the beginning. It's usually no additional cost or anything like that to have a separate bank account, but not having one is an additional cost if it ever comes down to.
Oh yeah, 100%.
Yeah, completely agree with that one. Chris, do you have any questions before we head to the next one?
No, I guess just the one comment I'd ask is, as far as an Excel spreadsheet along with the bank, is it better to do that with the bank, or you pull deposits or the statement straight from the bank account? What do you usually do with nonprofits for someone that's just getting started?
So for somebody that's like just getting started and you just open up an account, probably the only transaction is you just put in the minimum $100, whatever it is. You might have some Staples or going to Staples, Office Depot, some small ones. You could use an Excel sheet. Once you get above, I would say like 10 transactions a month, that's when you really want to start getting a software. And I think that's one of our future questions. So I'll just leave it at that. You want to get an accounting software that specializes in that.
Perfect. Well, let's jump right into it.
Here we go.
Go ahead. Take it away. Jim.
All right.
With QuickBooks, when should we move to QuickBooks? I know you said around 10 transactions. So I don't know if you want to dive a little more deeper into that.
Yeah. So like I said, any business is going to have worth its salt, is going to have an accounting software. So you don't necessarily have to use QuickBooks, but it is the industry standard. There's other ones that are coming up on the scene now, like Xero with an X, so Xero. That's a very popular one. It's similar to QuickBooks. One in the nonprofit industry that's starting to pop up a little bit more, Aplos. So it's not that it's mandatory, but it just makes you look more professional and it keeps things easy. It does, not to get accounting nerd, but it does the double entry accounting for you. You're not entering it in twice somewhere. And in an, again, I don't want to keep going to the worst case scenario, but in an examination from the IRS, if you don't have a software system, that's automatically, they're going to look at you sideways and think, what are you doing? So it just organizes everything. It actually, and then two, it allows you to see how your organization is growing. You can look back and say, oh, I didn't realize we got donations from these 10 fundraisers. Because if you're just looking at your bank statement, it just says deposit, deposit, deposit. You've got no idea and you're not making very good decisions. So it's not mandatory, but highly, highly recommended. And especially too, I hear a lot of people say, oh, I can't afford the cost. I can't afford the cost. So if you're a nonprofit and once you get your C3 status, you can get QuickBooks or Xero. And I would assume you could do Applos as well from a site called TechSoup. I think for the year, it's like $70, which is a steal because I know on the for-profit side, I think QuickBooks Online is like at least 50 a month.
Yeah, they just increased their prices this past September. So I think they went from
that's right. I remember getting the emails.
30 to I think 40 a month or something like that. Was the smallest plan now. And if you want to go to the next one, obviously more and more. So that's a steal. I'll take that right away.
Oh yeah. So I always tell people, you know, if you can't afford that, like we got to really go back to the drawing board, but there's really no reason not to get it. Cause I mean, that's almost free.
Yeah. And I mean, the organization side of things is huge. And I'm sure Chris can attest to on the finance side of things. When you're sitting down with a client that's more organized, I'm sure it's a lot easier to figure out the full picture of what's going on there.
Those that already have a budget, already know what they're spending on things, it's a lot easier just to kind of get going. And so, yeah, I would say if you're in a nonprofit or you're thinking about starting a nonprofit for the audience, and you're not that kind of organized, financially savvy person, make sure you get with someone like JT or have maybe a partner in the business who is more organized, because it's going to go a long way to getting you more success in your nonprofit and not having to deal with all the logistics of the finances. Nobody wants to be stuck in the finances in the trenches. That's why they hire people like us who are willing to be looking at spreadsheets all day long. So they don't have
exactly. And actually, to kind of piggyback off this, I forgot this. So a lot of when you're applying for funding in nonprofits, whether it's different donors, different grants, funding opportunities, they'll actually ask you for financial statements. And if you're using QuickBooks on a monthly basis and you're at least semi up to date, that's very easy. Whereas if you're doing it by hand, essentially in Excel sheets, and they're like, hey, I need your financial statements for the last 6 months, you're now that's very overwhelming. It's like, I have like no idea where to start. So that it actually can cost you money in the long run, because you want to be able to pull these numbers within a day or two. And especially if you're working with a consultant, that's really popular. Like basically consultants will go out and like look for funding for you. They always ask my clients, hey, how much did you make last year? Because they want to know, because there's certain grants that, you know, like, oh, we only want we only want organizations that made 200,000 and up, or between a certain amount. And if you kind of tell them, I don't know, it's like something like this, now like they don't even know what to do, because now they're at a disadvantage, because it's like, well, okay, I guess I don't even know what to apply for now. So everybody's going to ask you for these at some point. So it's just better to do it now. And especially if you can get it for $70 a year. I mean, like I said, that's a steal. Yeah,
I completely agree with that. More of the story, be organized. And that's the biggest thing. It helps you guys for figuring out, 5 years from now, we haven't been profitable since year one. And then now year one, you haven't been profitable. What decisions can we make? Where's our biggest expenses? Our biggest deductions? Or where are we going wrong? And what can we change moving forward? So definitely being organized, one of the biggest ones. Now, when we start a business, whether it be for-profit or nonprofit, we usually have startup costs. On the nonprofit side of things, how do we account for those startup costs?
Yeah, so there's two ways you can do it. And this is obviously board approval, or you have to, and you obviously as the founder can't vote on it because you can't vote on yourself. So the easiest way and the cleanest way is to reimburse yourself. So let's say, like I said, you paid some money for the hosting domain, maybe paid somebody to design it. You bought a desk, a home office, a computer. The easiest way and the cleanest is to just reimburse yourself and just say, hey, I spent $1,000. Once we start getting some funding in, I'm going to cut myself a check for 1,000. Boom, easy. The other way is you can make it, it's what's called a donation, what's called an in-kind donation. So you're buying services for somebody. So in essence, you donated the computer to your nonprofit. So those are the two way. And the nice thing is you can write not, it depends on your situation, but they are eligible to be written off. So
Gotcha.
To that point, obviously, if you itemize your deductions, that's a whole different story, but I always kind of leave it as a caveat. They are eligible for deduction. We'll leave it at that because everybody's situation is different.
Yes.
So those are the two ways you could pay yourself back or donate your services.
Okay. That's definitely a good one. All right, let's move on to the next one here. So how does payroll work for a nonprofit? Is it any different from a for-profit company? And if you're a nonprofit owner, how do you go about paying yourself if you can pay yourself?
Yeah, so we'll go with the first one. So payroll, the way it works, it's virtually identical to a for-profit business. You have to have an EIN. You have to have not an EIN, but a state ID number. So each state's most states are pretty similar. You apply for it. Every state's a little bit different, but I know in California, I believe it's FTB. Every other state's different. Even the states that don't have taxes, you do have to register. So like, even though Texas doesn't have income taxes, I would presume they most likely have unemployment taxes of some sort. So you have to have that ID number. So those are your two ID numbers. You apply at the federal level for what's called an EFTPS with the IRS, or the easiest way that I tell people is hire a payroll company. Call ADP, Paychex, Gusto, NetPay. There's so many of them now. And you basically say, hey, I'm a nonprofit. I want to run payroll for X amount of employees, and they will do it for you. And they'll handle all the filings for you, W-2s, W-3s, 941s, all the state forms. They do it for you. Because if you try to do it yourself, it gets super confusing. And I'll give you guys a hint. For my own accounting firm, I use Gusto because I don't want to do it myself. It's just easier. So I do that. If the expert does it, you should probably do it too. And then, can you pay yourself? Yes, as a founder, you 100% can. A lot of funders actually want to see that you're paying yourself, because if you don't, you'll burn out. You'll just I can't volunteer all my time. So you do eventually want to get paid. The way you have to do it, and it depends on the way your bylaws are set up, but you can't vote on your own salary. So you want to typically have about 3 board members. That's the minimum for most states. And basically they vote on it. You record it in the minutes saying that, board member 1 and 2 voted on board member 3's salary. They approved it. And then you just go to your payroll provider, I guess it'd be payroll providers like Gusto, NetPay, ADP, and say, hey, I'm going to add myself to payroll. They'll tell you the forms to fill out. You do it, boom, done. So in a nutshell, yes, you can do it. Call a payroll company and have your board members vote on your own salary.
Yeah, payroll is not something I'd recommend doing yourself. There's so many things that could go wrong. And especially when you have employees, employment law stuff, it's just, I do not recommend doing payroll yourself. Even for a lot of my business I sit down with that were just getting started, I just say, if you ever want to do payroll, talk with a professional first. It's not worth it. There's so many penalties, fees, and a lot of times if you don't make the payroll taxes, but you're responsible for making those taxes, paying them, you're responsible now for them personally. So if the IRS ever assesses you any penalties for not paying your business's payroll taxes, now those go to you personally and they're stuck with you, and they don't go away if you file for bankruptcy.
Nope. It's the same way on the nonprofit side. So you pay the same employment taxes. You may not you pay the same payroll taxes. You don't have to pay what's called the federal unemployment tax. Most states also waive it, but for the most part, it's the same taxes. And as Josh said, I had a client that did it themselves to air quote save money, and they did use QuickBooks, and it's very easy to use if you know what you're doing, but it's very easy to forget to pay the federal taxes. He didn't realize he wasn't clicking the pay here button, and long story short, he was 6 months behind and didn't even know it. And you
Yeah.
get a notice from the IRS basically saying your deposits don't match your payroll returns. And he asked me, he's like, what do we do? I said, you gotta pay it. Like,
Yeah.
that's, maybe we could waive the penalties, but for the most part, you gotta pay it.
Yeah. The IRS is very slow on getting back to you on your regular tax return, but payroll stuff, oh, they'll be
Oh
on
yeah,
it so fast because
they're
they
like white
know.
on rice.
They definitely know there. Chris, do you have any follow-up questions for that one?
No, I think you guys covered just about all of it. I guess the one thing I could add is it's just important, especially for payrolls, also as you're dealing with benefits, if they do end up having benefits, because if you don't have a professional, then it's going to be hard to know what can be deducted, and that's kind of my world is, getting health, whether it's healthcare or other insurances, investment, 401k, all those things. And I think that a lot of nonprofits probably don't get to that point, depending on the size, because you don't want to make it too lucrative. But I don't know, in your experience, JT, how many do have benefits worth not, for a nonprofit? A lot of times they seem like they're part-time work. Is that something that you ever see where benefits become a thing for a nonprofit?
Oh yeah. Oh yeah. Yeah. If you, this is when I was working for a firm, but we had a client that was, won't say the name, but they had at least 200 or 300 employees. So they're full-time ones. They all had full-time employees. They were making pretty much market value. So they had 401ks, they had health insurance. So yeah, so they have that. They used a professional, I believe they used ADP if I remember right. So, but yeah, they used a professionals because it's not worth it to try to do it themselves. And the nice thing about ADP was they actually offered workers' comp. So they just got it. You didn't have to go out and now find a third party to do it. They offered it. I don't remember if it was competitive or not. I would assume it was probably very standard to other insurance agencies. I'm sure it was just as good, if not better. But yeah, a lot of payroll companies will offer that to you. They'll offer those benefits to you as the liaison essentially. So they take care of it for you. And like I say, it's worth whatever they charge you is worth the weight in gold.
Yeah.
Awesome.
No, it's never worth getting those IRS notices.
No, exactly. Yep. We don't like getting them either. So
no, yeah, never, man, never. Even
I
when
don't like,
everything's
oh, great.
done perfectly, you still don't want to get that notice.
No.
But JT, I don't know if you have any final thoughts, any last minute stuff you want to throw in there, and then I'll let Chris, if you don't mind, at the end, once JT's done, you can talk about what we'll be talking about next time when we have a JT back here.
Yeah. So final thoughts. If you are looking at starting a nonprofit, I think it's a very rewarding business. It helps you get to help your community. But like I tell people, if you are going to do it, you have to be serious. It's got to be, this is a business. It's not like my side hustle. It's not my hobby that hope turn into business. Is that, if you're going to do it, great. I'd love to help out, but you got to treat it like a business, as we talked about, opening up that separate account, which is free to do, getting an accounting software, looking at payroll companies. And yeah, it's an exciting time. Nonprofits are growing. As funny as it sounds, there is a lot of money in the nonprofit world. All my clients make at least $200,000-$300,000 a year. So some are over $1 million. So the money is definitely out there. They have employees that they pay insurance on. So it's definitely out there. If your heart is in it and you have that right place, I would say go for it. Just like any business, the time is now.
Yeah.
Awesome. Well, thanks for that, for getting this set up, Josh and JT, for coming and meeting with us today. The next topic we'll be hitting will be on audits, donated services, invoicing, and budget. So look out for that. And we'll go into some more details on things that business owners need to look out for.
Yeah. But other than that, JT, appreciate you taking the time, man. Appreciate you kind of giving some information for us, for our clients, for individuals out there that need it. Because I know nonprofits a big thing, especially with me and Chris being veterans. There's a lot of veteran nonprofits out there that either want to get started or are started. But once again, appreciate your time today. You guys keep an eye out for the next episode that we're going to do, go into more detail with JT. And Chris, you have any final thoughts, any last minute things you want to say?
No, that's it. Hopefully everyone had a great Thanksgiving and getting ready for the next holiday, Christmas, which is a great time for nonprofits. So if you're a nonprofit, listen to this, do your marketing and get that business so that you can help out more people with whatever you're doing.
Yeah, there you go. And this is the year for charitable donations. JT, if you don't mind sharing with everyone where they could find you, how they could contact you, and I'll also give anyone that wants JT's information, shoot me a text message or email. I'm happy to give you guys the information as well. But go ahead, JT.
Yeah, so I normally just direct you straight to my website. It's just my name, jtpells.com. There you could book a consultation with us. You could email me. So that's generally the way I do that. So if you're interested in, you can learn a little bit about more of the service we provide, see some testimonials from happy clients, and see if we're a fit for you. So yeah, just go to my website, jtpells.com, and we'll get back to you.
There you go. Keep it simple. But other than that, we'll see you guys next time. Hope you guys all have a wonderful holiday season.